Hi everyone, my name is Richard. I'm a JD student at the Melbourne Law School working in the Melbourne Law School Tax Clinic, or the MLS Tax Clinic for short. The MLS Tax Clinic is a supportive, inclusive student-run clinic where you can receive free tax assistance from Melbourne Law School students, either online or on campus at the Melbourne Law School. We are part of the National Tax Clinic program, a government-funded initiative to help people who may not be able to afford professional advice and representation with their tax affairs. Our students are supervised by a dedicated clinic supervisor and experienced tax practitioners. To apply for assistance, please see the application form on the MLS Tax Clinic website. Today, I will give you a brief outline of work-related car expenses for tax purposes in Australia on behalf of the MLS Tax Clinic. The information provided in this video is intended to be educational in nature and should not serve as legal advice. Please consult a legal or tax advisor if you have specific questions. In this presentation, I will discuss eligibility to claim work-related car expenses, the method to calculate a claim, and further resources. If you use your car for work purposes, you may be able to claim deductions in your tax return for car expenses you incur relating to that work. To claim a deduction for work-related car expenses, firstly, your vehicle must meet the definition of a car and you must own or lease it. And secondly, for a vehicle that isn't yours or isn't a car, you may claim the deduction in your tax return as a work-related travel expense, not as a work-related car expense. The expenses must incur for work-related trips, and you must have spent the money yourself and were not reimbursed, and you must keep records showing you incurred these expenses, such as a receipt. You can use the My Deductions tool in the ATO application to keep track of your expenses and receipts throughout the year. Vehicles are not cars include motorcycles, scooters, and similar vehicles, and vehicles with greater than 1 ton carrying capacity, such as trucks, heavy vehicles, or a carrying capacity of 9 or more passengers, such as a minibus. And you can't claim running costs for a car you use under salary sacrifice or novated lease agreement, which is not yours. You can claim expenses for trips between workplace or to perform your work duties. However, trips between your home and place of work generally are not claimable, except in limited circumstances. Work-related trips include the following situations: perform your work duties, attend work-related conferences, deliver items or collect supplies, go between 2 or more separate places of employment, go to an alternative place of work from your regular workplace or home and back. Limited circumstances claiming the cost of trips between home and work as shown in this slide. Work-related trips do not include the following situations: live a long way from your regular place of work, work outside normal business hours, do minor work-related tasks on the way to work, go between your home and regular place of work more than once a day. You are on standby duty and an employer contacts you at home to come into work. Have no public transport near where you work. Do some work at home. These are 2 methods available to calculate your claim: cents per kilometer method and logbook method. The cents per kilometer method does not require you to calculate your actual car expenses for the income year, unlike the logbook method, which does require this. Given that the cents per kilometer method uses a fixed rate, it's easier to apply than the logbook method. You may choose the method that provides the best outcome, so long as you meet the criteria and record-keeping requirements for that specific method. The ATO has develop a work-related car expenses calculator to assist you in calculating your expenses. Regarding cents per kilometer method, to calculate your deductions using this method, you need to multiply the number of work-related kilometers you travel in the car by the rate per kilometer for that income year. Work-related kilometers are the kilometers your car travels in the course of earning your income. For the 2023 to 2024 income year, the rate is 85 cents per kilometer. For the 2022 to 2023 income year, it's 78 cents per kilometer. And for the 2020 to 2021 and 2021 to 2022 income year, it's 72 cents per kilometer. You can claim a maximum of 5,000 work-related kilometers per car. The cents per kilometer rate covers all car expenses, including decline in value, registration, insurance, maintenance, repairs, and full costs. You can't add any of these expenses on the top of the rate when you work out your deduction using this method. If you use the cents per kilometer method, you don't need to keep receipts for expenses. However, you do need to demonstrate ownership of the car and explain how you calculate your work-related kilometers. For example, you may use the diary or the My Deductions tool in the APO application. This example of this method. Mary, a nurse, used her car to trips between different clinics and traveled 4,500 kilometers for this income year. And this slide shows how Mary could calculate her deductions through this method. And this another example for this method. Tom makes a 27-kilometer round trip in his own car from the head office in the city to meet with clients. In addition, once per month, Tom makes a 106-kilometer round trip to visit clients at another location. But Tom didn't keep his receipts for fuel expenses. Tom could use the cents per kilometer method, as he had maintained a diary of the kilometers he traveled for work-related trips. The benefit of this method is that it's easy to calculate and doesn't require keeping receipts. This slide shows how Tom works out deduction. And regarding logbook method, to work out your work-related percentage, you need a logbook and the automated readings for the start and end of the logbook period. Your logbook period needs to show and be kept for continuous representative 12-week period, and that 12-week period needs to be representative of your travel throughout the year. If you started using your car for work-related purposes less than 12 weeks before the end of the financial year, you can extend the 12-week period into the next financial year. However, if your logbook is no longer representative, you will need to complete a new logbook. Your 12-week logbook is valid for 5 years. You can claim the running costs and the decline in value of your car. However, you cannot claim capital costs such as the purchase price of your car. Regarding how it works, the first step is work out the total number of kilometers you traveled during the logbook period. And the second step is work out the number of kilometers you traveled for allowable work-related trips during the logbook period. And the third step is divide the work-related kilometers by the total kilometers, then multiply by 100. And this is your work-related use percentage. The fourth step is add up your total expense for the period for which you are claiming. And the fifth step is multiply your work-related use percentage by your car expenses. This is the amount you claim as a deduction. For this method, you must keep a logbook, receipts for your fuel and oil expenses, or a record of your reasonable expenses based on the automated readings for the start and end of the period for which you are claiming, and receipts for other expenses for your car, as shown in this slide. a record of the purchase price of the car and how you work out your claim for the decline in value of your car, including the effective life and method you use. Your logbook must cover at least 12 continuous weeks and be broadly representative of your travel. Include the destination and purpose of every journey, the odometer reading at the start and end of each journey, and the total kilometers traveled during the period, and includes the odometer readings for the start and end of the logbook period. For example, at the end of the 2022 to 23 income year, Jerry's logbook showed he traveled a total of 11,000 kilometers. Of these, 6,600 were for work-related purposes. Jerry's total expenses, including depreciation, are 9,000 for the income year. As Jerry kept a logbook for the 22 to 23 income year and the receipts for his expenses, he may consider using the logbook method, which could reflect the actual car costs for the work-related travel. As it is shown in this slide, Jerry could work out his deduction for the 2022 to 23 income year through the logbook method. To conclude, deductions are beneficial as they enable taxpayers to reduce their taxable income. The greater amount of work-related car deductions you have, the less tax you will pay. However, it's crucial to remember that if you claim such deductions, you must be able to prove your eligibility and compliance with the law. If you would like further information or assistance regarding work-related car expenses and deductions, you can book an appointment with the MLS Tax Clinic, learn more about it on the ATIL website, or consult a qualified accountant or legal advisor. Thank you.